People in the waiting room. Hello, guys. Hi, 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 hi. Bear with me a sec. Just loading up. Thank you, everybody, for joining. We are gonna go down the rabbit hole today. I hope you've got your seatbelt. IG. So, as we know, the game, what's it about? The game is just about educating and elevating as many people as possible about things that happen inside the stock market and how the stock market works. This is not financial advice. I'm not a financial advisor. In fact, let me just do my full disclaimer before anyone tries to sue my ass. We ain't about that life. Okay, cool. So, full disclaimer. Okay. So, full disclaimer. Please do your own research. Our content is intended to only be used for informational use only. Very important to do your own analysis before doing any or making any investment based on your own individual circumstances. You should take independent professional advice from a professional advisor or independently research and verify all and any information you find so that you wish to rely upon with you to make an investment decision or otherwise. I am not a financial advisor. I do not intend to be perceived as a financial advisor. All investments come with risk. If you're unable to mitigate the risk, please seek contact from a financial advisor. I'm working with several financial advisors. If you want to be put in contact with one, please, I can help you. Okay, cool. So that's all that stuff out of the way. So let's get into the more people. Submit all. Okay. So let me know if you can see my screen. Okay. So in today's episode, like I said, we're going to do a little of the stuff that we normally do, the normal fundamentals. I'm going to throw it out to the audience as per usual to pick a company that we're going to break down. But before we do that, being as it's the hot topic of the week, we are going to break down some of the things that we saw in GameStop about 3 or 4 months ago that made us go, this is a good opportunity. But at the same time, kind of made us question a couple of things. So let's get into this now. If the slides would work, wait. Oh, too much bandwidth. Okay, cool. There we go. Okay, cool. So first things first is what people should really like clarify is that it's very possible to retire or become a multi-millionaire from investing. However, the information that is needed to do that isn't on MTV. Unfortunately, it's inside books, and as we know, books aren't popular. Most think it's in education. It is depending on where you go. Most universities teach how to run a business. However, universities like Harvard, they teach how to get the most out of your staff and how to build and start a business. Fortunately, it's very difficult, almost impossible to save your way to financial freedom. But what most people that have had incredible wealth is what they do is they put their money to work with CEOs better than them. And ultimate advice that I would give is to not have all your investments on one platform. We're going to see that why a little bit later. So this week is going to be a massive week for the markets. If we look at the earnings that we have this week, remember last week we had some of the major players in the FANG. We had Facebook, we had Tesla, and we had Apple. Tomorrow we have Amazon and Google goes under the synonym Alphabet, and also Alibaba, UPS, EA, Chipotle. Today we had Thermo Fisher Scientific. Some of the major ones to watch out for, obviously Spotify, Boston Scientific. Guys, just gonna meet you all. Allow you to unmute yourselves later. Okay, cool. So who else have we got? We've got the likes of Snap Inc. We have Gilead. We have got some of the Bristol Myers Squibb as well. So we've got quite a few companies that have got the vaccine, including Pfizer. So they're going to see massive revenue jumps. We've already seen a bit of pre-market action on Amazon starting to head up. So logically, the same thing should happen with UPS. Normally, that's the way that they tend to flow together. Obviously, in terms of gaming, it's a massive week as well. We have Unity doing their earnings. We also have Pinterest and also Yum in the food sector. Yum, if you don't know, the guys that own KFC, Pizza Hut, and Taco Bell. So if they've adapted to this online system and eating out, then they should do well. So let's go a little bit further into it. So GameStop. So the intentions behind this whole GameStop movement were incredible. I'm all about it. It was similar to the Occupy Wall Street movement that happened in 2008, where the hedge funds got away with absolutely destroying people's lives and livelihoods and all their savings and their homes and so on and so forth by creating fraudulent concepts. But what ended up happening is these companies went bust, and what happened? Out came the bailouts. What happened? How many people went to prison? Pretty much zero. And this was a massive, massive problem. Now, what the whole concept with this whole rally behind GameStop was because GameStop was being shorted more than the actual shares that existed. I'm going to go into what shorting means later. But normally you can short a company to around 90%. But in this case, GameStop got us shorted over 120%. So that's selling more shares or something than even is in existence. So a lot of people decided, right, we're going to rally behind this and we're going to drive the price up so that it doesn't ever reach that sell point so that the investors don't actually make their money. However, there was a problem with this. The simple problem with this is mass human psychology, just because as soon as a lot of people get involved, the kind of intention you have gets affected by several things, because a lot of people get into it not to actually invest and hold the stock for a long period of time. They get into it to just because of the hype. And unfortunately, if you look around on YouTube and on various platforms, some of the biggest investors, some of the most admirable people like Mark Monroe, Ian Dunlap, Stephen Graham, they aren't really very bullish on this. And that's not because they don't want to make money from it. It's because they understand the consequences and what's happening behind the scenes with this classic pump and dump scenario. And one of the other reasons is because it's about purpose versus majority purpose. Now, the purpose and the intention was to stick it to these hedge funds and to keep the price of GameStop at a certain level so that the hedge funds that were shorting it couldn't pull out. Now, the majority purpose, what's going to end up happening is we're going to have a massive effect of the sudden wealth syndrome. And that what that is a lot of people that are in this GameStop aren't actually going to be able to hold it, because what's going to happen is they're going to see more money than they've possibly ever seen in their life. So this is one of the key factors that we have to bear in mind, is that it's going to be very difficult for people to hold their positions if the money that they're now seeing in their accounts is money that can change their lives that they've never seen before and no one in their families has ever seen before. And this is completely different to investing as shareholders and wanting to be a part of the company and wanting to go to the board meetings and to want to have voting rights. That's the original intention. However, it's kind of changed now into a bit of the, it's going up, it's making money, let me go in and get involved and make some money from this, and then onto the next stock and onto the next stock, which unfortunately is exactly what the hedge funds wanted. So in terms of shorting the stock, how does it work? Basically, it's basically borrowing from Peter to pay Paul, that age-old scenario. So it's basically you buy the stock from one person to sell it to someone else at a cheaper price. So let's say, for example, we all know Fadlan on the call. Let's say, for example, he's got a GameStop. I would now borrow his GameStop from him. I would then sell it to someone else for way lower than, for say, for example, I got it from him. I borrowed it from him for £1. I've got to give it him back for £1, but I'm going to sell it out onto someone else for a tenner and then give him back the stock from someone else. Very, very, very complicated process, which basically doesn't make any sense because it then means that people can just continuously keep selling the same thing that doesn't even exist. So this is the problem with short selling, and why I personally try not to sell any stocks. I don't really look for any downtrends just because I think it's kind of bad karma. Anyway, so the other thing is the difference between buying, selling, calls, and puts. So unfortunately, a lot of people that ended up getting, not the people on Wall Street Bets, there's a lot of people on Wall Street Bets that are highly educated, that know more about investing and trading than me. Some people that have been doing it longer than me, some of them working for hedge funds. Some of them are actually inside the hedge funds, which we'll come on to later. Now, one of the key things to understand is what an option call is. So a call or a put. Now, a call is where you can, it's basically a way of hedging your risk. So what it allows you to do is it allows you to guess the price and the date of something that a stock is going to get to a certain price. Fadlan, I'll try and just double check the audio. There we go, testing. Can you hear me now, Fadlan? Okay, it might just be your audio then, Fadlan. I think everyone else can hear me. Okay, cool. So yeah, as I was saying about a call option. So a call option, that'd be like me saying there's a stock at the moment. It's at £10 a share. I'm predicting that by the 31st of December 2021, it's going to get to £100 a share. I now have a one contract. So I now have a contract saying that for £1, I'm going to loan the shares, and if they get to £100 on that date, I get them for £10, and then I get the actual shares, but I've only paid £10 for them. So it's the broker that ends up losing the money. Now, this is a call option, and there's also the exact same, but in the opposite direction. So this is how some of the hedge funds can make crazy money on the upside and on the downside. So the concept was originally created for insurance. So it's, say, for example, if you're going to put a lot of money into a company, you would put in a put option to say, okay, I've put in a lot of money into this company. Just in case it goes down, what I'm going to do is I'm going to get a put option, and the expiry date is going to be 3 years later, 5 years later. If it gets down to £10, then I get X amount of money, because I got the put option at this higher price, if that makes sense. If not, message me, we'll go over it at a later time, or just Google it. It's very, very complicated. So here's the play that normally works with pump and dumps. Now, again, a lot of people that are new to the markets, new to investing, new to trading, this seems like a once in a lifetime thing, when in this year alone, we've had already 4 pump and dumps that have been significant. We've had the Kodak one, we've had the Hertz one, we've had the Nikola one, and then there's various famous other ones like the Elron scandal, and then the stuff that caused 2008 crash. So sometimes when these get out of hand, they can actually cause massive market corrections or massive market crashes. So here's how they traditionally work. So what happens is, you normally, a company or a hedge fund has a short position. So that means they're counting on a stock to fall to a certain price, and that's how they're going to, on a certain day, and they'll make loads of money that way. But then what happens is the counter happens, which is called a short squeeze, where the opposition or somebody that doesn't agree with what you're doing will come in and buy loads of that stock, which means that the price stays above where your option was. It stays above your put option, meaning that it never gets released and you never get your payout. Then what happens is the hedge funds tend to counter that, and they also get in. So now they get in, and then what they'll do is they'll buy the shares, and they'll buy big, which will then force the price up, because what will happen if one hedge gets in, other hedges start getting in. Then what they'll also do is they'll put a call option to a really high price. So let's say, for example, with GameStop, it was at $6 in September. Now, if they've put on the first pump, we saw it get up to about $30. That's amazing. At that point, some of the hedge funds would have now started putting in option calls to say, okay, if it gets up to 300 from 30, I want to be able to pay $30 for each share instead of the 300 if it gets to 300 by this certain date. So then they end up making absolute racks if the price actually gets up to that. And what happened? Wall Street Bets got behind it, was pushing it up. So the price flies up. So the more people are now getting in because they're seeing the price fly up. So then what ends up happening is the hedge funds hit their call option. So in this scenario, it got to 300. So then what happens is they now have more money to buy more shares. So then they buy more shares and the share price goes up even further. As we saw, it got to 500. And then guess what happened? We have what is called, this is like the next stage, which is the forced sell. And at this point, this is where people, the share price is now so big for the people that originally got in. This is where the sudden wealth syndrome starts to kick in. This is where you will also have often certain platforms and brokers starting to force a sell, whereby you can no longer buy the shares, you have to sell. And then obviously what will happen there is the price will come down. Now what will happen is the hedge funds will do a big sell. So they'll take out the shares that they originally bought and drove up. They'll now take out, and plus they now also own all the core option shares as well. They'll take all of that out, which is the next step that we're waiting for. Now we've seen the first phase of the sells. We're going to be going into the second phase of the sells and this pump and dump. Then what ends up happening is, combined with the sudden wealth syndrome, we have loads of people that start getting hesitant because they've put money in and then are like, uh-oh, it's going down, I need to get out. So now the people sell. And then finally, the hedge funds do one final big sell, which forces the fear. And then because the price has dropped so dramatically, what will happen is they will freeze trading. So once if trading moves too much, then certain platforms and the SEC can actually freeze trading if it starts affecting the actual market. So if this happens, because it's close to causing a crash, because you have to remember, if too many hedge funds go down and too many hedge funds go in the negative, it can cause the whole market to crash. So what they'll do is they'll freeze the whole market, and then what will happen is the next day we'll have what is called a gap, where for no apparent reason the price was here, and instead of even having a candle, it just appears here. So then it just means the people that you're literally left holding the bag. Now, because of the gap down, everybody runs out. Guess what happens? The hedge funds hit their put option. So now they've just made even more money. So they end up in this pump and dump process, making money about 4 to 6 times throughout the process. So I just want to show you some examples of some pump and dumps that have happened already this year, and then we'll come back to these slides, and we're going to get more deeper into it and see some of the things that happened. So actually, we'll start off with that. So this is a website that I use to do my deep dive analysis, a website called Dataroma. And here we can see Michael Barry in Cyan Asset Management, his positions and all the people that were buying and reducing their shares in Q3 2020. And this is what made me decide to get in on Gate and start being public about GameStop. But you can see Michael Burry was actually starting, he bought 3 million shares in Q3 2019. So this is when this play originally first happened. And this is the guy that predicted the market crash of 2008, bear in mind. Now, when we look deeper into GameStop and we look at the people holding it, we can see here in Q3, when we look at the big hedge funds, what's happened. There's a few people that have gotten in 50% increase. And we can also see the positions, the calls and puts here. So you can see the total value of the puts and the calls I was talking about. Cool. So yeah, let's just show you some examples of previous Okay, so let's start off with Hertz, because that's a really common one that a few people should know. So this was a pump and dump on Hertz. You can see it there. It's completely abnormal trading, and then the company got obliterated. The other one on Kodak. You can see it there. This is where it was trading at. This is where it got to. You see that. One of my favorite ones is actually Rightmove. They got absolutely savaged. There we go. You see that completely dropped off the cliff. So this went from 4876 all the way down to 390. So we can see this isn't new. It happens quite a bit. Now, an industry where it happens literally on a daily is actually the pharmaceutical industry. It happens all of the time. So it's not a new thing. It's not like a one time only to be able to get involved in a pump and dump and make 300, 400%. And you have to bear in mind, these kind of things happen in cryptocurrency all the time. So this kind of fear mindset of, is it too late to get in? Don't worry about it. If you're planning on being an investor for a long period of time, there's going to be countless that appear and come along. So I'm just going to show you some more examples of some in the pharmaceutical space. So let's go with AMRH. Comes up. You can see this one here. You see that completely abnormal jump up there. So we've got that one there. We've got another one on AYRO. I'll just show you 4 or 5 of these. So this one gets continuously pump and dumped, as you can see here, there, and here, and again here. One more. This one's ridiculous. And then you can see the short that happened here, and then again here. So it's not anything new. This kind of thing happens all the time. It's just that when it happens in the pharmaceutical industry, there's no press on it. Whereas in this case, there was a lot of press on it. Why was there a lot of press on it? There's a lot of press on it because of 2 certain individuals. Now, these 2 certain individuals go by the name of Chamath and Elon Musk, who I'm sure you've heard of. Now, Chamath, what was his role in this? Chamath openly came on Twitter and said that he had call options, as we can see here, and 50 contracts on a call option on GameStop. So a multi-billionaire hedge fund owner that's very for the people, saying that they've got this, what's going to happen? Other hedge funds are going to get in. A lot of retailers are going to get in. And again, why was Chamath so bullish on this? Because Melvin Capital, the main company that a lot of people were attacking from Wall Street Bets, always short his positions in Virgin Galactic, and they also are very passionate and go on mainstream media telling people that Bitcoin and Tesla is a bad investment, and they like to short Tesla and Bitcoin. And Chamath is one of the biggest holders in Bitcoin, and also, as we know, Elon is obviously a massive holder in Tesla. So we can see here these kind of tweets here, basically memes from the CEO of one of the most promising hedge funds in the world. We can see that this was a little bit deeper than it looked like. It was like a bit of a billionaire beef. And in my opinion, this looked like a flare gun, because Etsy, once Elon tweeted this, the stock price of Etsy went up, and then he tweeted about GameStop, and then yeah, it started flying. So again, we've kind of been through the routine of how a short squeeze normally plays out for hedge funds. So it ends up in a position where you're basically playing chicken with a hedge fund and trying to figure out who has more to lose and who has deeper pockets. So it's basically the people versus a hedge fund, and it's people that have got their savings invested or just money that they've got invested versus hedge funds that can get bailouts. And this is where the whole influence versus manipulation comes in, is because there's going to be consequences from this, just because it's almost illegal to give financial advice and say you should buy this. And this is kind of this stock, because this is what was happening in some cases on Wall Street Bets, and in different social media platforms. Whereas you are actually allowed to say and show what you've bought, like what Chamath did. You are actually allowed to say, yo, this stock is $3, but I'm saying it's going to get to 3,000. That's what you can do. However, in terms of manipulation, this is where we're now going to go down and where it gets a little bit messy. So we saw the Robinhood, which is the main platform that Wall Street Bets traders are using, actually had to freeze the buy option. So basically forcing people to sell. Now, what's one of the stages of the whole movement is forcing people to sell, or putting people in a position where they are more likely to sell. So what's going to happen, especially combined with sudden wealth syndrome? So this is some screenshots of some people's accounts, people paying off their student loans, people making 2 million, people making 49,000 and 347,000. And you just got to think, if people are taking screenshots of how much money they've made from this trade, that means it's possibly the first time that they've ever seen or made this amount of money, which is why they're taking the picture, which then increases the chances of, when you're seeing these pictures, that, hang on a minute, we should probably keep pumping up the price because they won't be able to take it, and they're more likely to sell and actually take that money. So as we can see, going along with the stages. Now, in terms of market manipulation, this is, what does it mean? So market manipulation is when things are done to be designed to drive a stock's price up or down. Now, as we're going to be looking, we've already seen some things that happened in this situation that could have been driving the price up or down. And intentionally or willfully conduct designed to deceive or defraud investors by controlling or artificially affecting the price of securities. Pay note to that. Intentional interference with the free forces of supply and demand. Was there intentional or accidental interference with the free forces of supply and demand with the forced sell? We don't know. But when we get deeper in, it gets very interesting. So this is where Citadel come into the picture. Now, Citadel, what they actually did is they decided to bail out Melvin Capital, this company that everyone was really getting at. And they actually invested 2.75 billion into Melvin Capital to help save them from going bankrupt. Now, why is this a bit awkward? Because Citadel actually also do clearing and order flow for Robinhood. Now, everyone's on Wall Street Bets using Robinhood. Robinhood do the clearing and order flow. Hope you're starting to see the picture here. Now, what is the clearing and order flow? Clearing and order flow is just, it's not Robinhood that actually is giving you the shares. It's actually Citadel that are buying the shares on your behalf, on behalf of Robinhood. Now, what is order flow? Order flow is the data. It's the raw data of how many people are buying and at what prices they're buying at. Now, what ends up happening is Citadel actually pay Robinhood for their order flow. So this is like, say, for example, you going to a shop to buy a pair of trainers, or this must have happened to some of us. You go to JD Sports to try and get a pair of trainers. They're unavailable. They're sold out. So then they ring to a different store and say, look, you can go and collect them from this store. So then in this case, Citadel, what they will do is they'll actually go and get more stock at a cheaper price for themselves, boost up the price of the stock just by a little bit. But you have to imagine that little bit times by millions is billions. So they make billions in order flow. So this is where it gets a bit sticky, because Citadel bailed out Melvin Capital. Robinhood, where everyone was trying to get at Melvin Capital through Wall Street bets, give money and get paid by Citadel and give the order flow. So Citadel see and make money from all the trades that are happening on Robinhood. Yeah, sticky. So as we see, a pair of billionaire investors are swooping to support a short-selling hedge fund in its battle against an army of indifferent day traders. Steve Cohen's 0.72 and Ken Griffin's Citadel are the other partners, all plowing a total of 2.75 billion into Melvin Capital, as we saw. Now, there's actually a class action lawsuit, as we saw here, being filed against Robinhood, just because some people have seen that this has happened. And this is what Michael Burry had to say. He said, so he's obviously made a lot of money having 3 million shares in GameStop. So it ballooned his value from about 17 million to around 250 million as of Tuesday, which is almost a 1,400% gain in under 4 months. And he tweeted, "If I put game on your radar," and he did for me, "you did well. I'm genuinely happy for you. Sign Asset Management," boss tweeted on Tuesday. "However, what's going on now, there should be legal and regulatory repercussions. This is unnatural, insane, and dangerous." He added, tagging the Securities and Exchange Commission's enforcement. But then the tweet was deleted minutes later. Now, why would he be saying there should be regulatory repercussions? Is he talking about for the Wall Street bets people? I don't know. And this is just some examples of the order flow. And this is why Michael Burry is a little bit pissed, simply because he's for the people. And this move has kind of been hijacked by some hedge funds, as we can see with the order flows. And who do they sell the order flow to? Robinhood's order flow also goes to JP Morgan Chase and Goldman Sachs. And they are some of the people that are invested in Robinhood. Now, remember Citadel, this is their order flow, as we can see here, revenue from Robinhood Securities. The reason why he's pissed is because this is all the hedge funds that were in on GameStop. So you can see million plus shares. So you can see BlackRock were in, Vanguard were in, Morgan Stanley were in, State Street were in, Invesco were in, Bank of New York Mellon were in, Wells Fargo were in, Goldman Sachs were in, Northern Trust was in. All the hedges were in. So this is why Michael Burry's pissed, because it's basically the same shit all over again. And again, BlackRock just casually letting everybody know that they made 2.4 billion from it. AMC Holdings, Silver Lake, one of the hedge funds inside AMC, sold their holdings in AMC when they made 713 million. Yeah, so we can see some of the people that have made a lot of money from this, and their gain in billions: 3 billion, 2.9 billion, BlackRock 2.7, Vanguard 1.7 billion, Sequoia Capital, no, this is the Susquehanna one, 1.4 billion, Dimensional Fund Advisors 1.3, Zenvest Management 1.2, Donald A. Foss 1.1, and Ryan Cohen, who's the CEO, made 3.1. But what I really, really hope you're grasping here is the sheer gap between, yes, people have made a couple of thousands or maybe even millions in some case, but the gap between that and a billion or 3 billion is ridiculous. So now this is where it gets interesting, is the bailouts. Just like with 2008, Robinhood is getting bailed out by Sequoia Capital, and also by their friends JP Morgan Chase and Goldman Sachs. So this is or isn't what could have happened. This is a scenario what could have happened, which is why Robinhood had to freeze the selling. Let's just say hypothetically they were using a company called Apex Clearing, and this is the scenario that happened, that people were trying to buy, but there was nothing left to buy. And then the depository company was like, no, you've got to have 100% reserve, or you've got to stop allowing people to buy. That's a scenario that could have happened. But yeah, the SEC have got involved and have given them a little slap on the wrist, as per usual. So that's the whole GameStop thing done. Hope you took some value from that. The websites that you can use to do your research, like I've done in terms of the company's holdings and positions, call options and put options on a stock, is Whale Wisdom. We can see the calls on AMC. There actually wasn't that many. You see, it's actually down 61% in the last quarter. Now this is actually quarter 3, so we'll get the full picture of exactly what's happened when these hedge funds all have to do their earnings reports and their filings, which will be in the next month. So we'll find out who was which hedge funds were in from what point and how much they were in by. So that's when it will get very, very interesting. Where people got to show their cards, basically. And then Melvin Capital, we can see that's their put option. So yeah, the writing is literally on the wall, and so is the blood. But anyway, so what I wanted to talk to you guys about today is the power of long-term holding versus day trading. Just because you're actually, statistically, the numbers work way more in your favor for you to hold long-term than for you to get in and out of trades over a longer period of time. So let's just go back one. So this is just how it works. This is over 91 years through to 2018. So the number of positive periods versus the number of negative periods. So we can see here in just a 1 year period, there's 25 negative days. In a 3 year period, 15 negative days. In a 5 year period, 11 negative days. And in a 10 year period, 5 negative days, with a 94% return rate of positive days out of 91 years. So when we look at it in terms of an £1,000 investment, it works out similar to this. This is just for an index like the S&P, by the way. So an £1,000 investment, if you, between 2010 and 2019, you took your money out of an investment for just 10 of those days, untouched, it would be 3,000, what it would have grown into. Missing just 10 days out of the 9 years, this is the difference. Missing 20 days, you only made £97 in what, 9 years. So you can see that the days that the market's going to spike, you can't actually always predict, just because of human randomness. So it pays to have some investments that you just hold, for 5, 10, 20 years. And again, it gets even more dramatic as we look. So if you look from 2000 to 2019, which is 20-year hold, you can see if you missed 20 days, you'd only have made £722. So you would have actually lost money. And then the dramatic one is obviously 30 years from a £1,000 investment, completely untouched for 30 years would be 17,000. So that's a big difference. That's 17x on your money just from buy and hold, just holding, versus cashing out all the time, especially with really good value stock. You don't want to just keep selling, getting in, getting out, getting in, getting out. I'm a prime example of that. I faced that with Tesla during lockdown. I got in and out of Tesla, I think it was 3 times. I ended up getting a total return of 200%. And some of the guys that I was working with, they were getting returns of 600%. So you can see it pays to find good value companies and just stick, instead of counting on these once in a lifetime events. And again, with crypto, I think the same kind of thing really does apply to crypto as well. So I'm going to open up the mics now, and I'm going to just do a deep dive on a company of somebody's choice. Let me just open up the mic. Should be able to unmute yourselves now.
Yo, I want to go first. Okay. I beat y'all. Can we look at Nike?
Nike, yep.
Okay, yes, please, cool. Sir.
So, first of all, what we do is we go hypercharts, just to give us the quick overview. There we go, Nike. Okay, so first of all, their quarterly revenues. Let me just close these down because these are a little bit annoying. Hold up. Okay, cool. So when we look, is it going up and to the right? Yep, it is. Not by a dramatic amount, but it is going up and to the right. It'll probably look a little bit better when we switch it to annual. Yeah. In fact, this year 2020 didn't make as much by just over 1 billion, less than they made. In fact, it was a strange year, again, because their operating income was down. So obviously it was down 838 million. So straight away, I would do some digging and some investigations deep. From seeing that, I'm definitely going to look at Yahoo Finance and figure out what's going on here. And again, this just isn't stable in comparison to the likes of Microsoft and so on. For a startup company, this is acceptable. But for a big brand like Nike, having years where you're down 921 million and then down 790 million in a quarter, like, what's going on? So that's already got me going, So then margins, are their profit margins increasing? 10% profit margins. I know that's profit. This is the profit one here. 8.38, 14.32. So their profit margins are up, but yeah, so far this isn't looking great. And again, operating expenses are ridiculous. Look at this. Where is their research and development? Like, it's just not there. So they've got more money being spent on operating overhead than on demand creation, which I guess is their marketing, which for me, that's a no-no. I want to see more money being spent on marketing and creating demand than what it's costing you to run the damn company. Growth obviously spiked up, but they had a massive dip here in Q4 2020. So it looks like lockdown and recession and COVID hit them hard. They're on the way back up, but again, I just think just straight from the off, Me personally, I think you can find better companies. Let's take a deeper look under the hood. Okay, so first of all, I'm going to look at the chart and compare it to the market. So if it's not beating the S&P, then, you know, okay, so that's the Dow. I don't know why it's not bringing up the S&P. Bear with me. Oh, there we go. Okay, cool. So that's the S&P, and this is Nike. So it is beating the S&P. Let's just see 5-year basis. So yeah, on a 5-year basis, it's beating it by around 30%. But again, it's not great. It's okay. It's okay. Okay, so let's look at the financials. Figure out what's actually going on here. So revenue is increasing, as we can see, apart from this little dip that they had. Cost of revenue, the ratio was good. It was like a 2-to-1 ratio in 2019. In this quarter, slipped a little bit here, and again, it's good here, but it's not ideal. But again, the admin is general and administrative is really high. Net income from all of that revenue, from 38 billion revenue in 2 bill pocketed, so 2 bill net isn't that great. Earnings per share 1.19 to 2.55. Again, okay, but just not blowing me away. Then when we do the assets liabilities breakdown, total assets 31 billion, total liabilities 23. So it's not phenomenal, but it's okay. Again, cash 8 bill. What was the debt again? Yeah, they can't really cover their liabilities with their cash. So again, they're okay. So for me on that already, I wouldn't be really looking much further, but I'll bring up the chart. So we can see beautiful trend line that it had on the daily. Let's bring it out to the monthly. So the monthly, really nice, steady, progressive trend line. It's had a nice bounce back since COVID, where it touched the 100-day moving average just there. It's now bounced back up. However, it's bounced underneath that trend line now. So it's now a case of how far is it going to retrace down? It's peaked out of the base of the Dochan. It's coming back up. Potentially, if I was going to get in it, I would wait until it's passed over this point here, until it's passed over the 50-day moving average, and until it's passed over the midpoint of the Dochan. But apart from that, I wouldn't really be buying that just yet. Well, if you think you've got a steal, then yeah. but I just personally think there's way better companies out there. But we'll check under the hood. We'll see who's in. So in the top 10, it's in 121 hedge funds. Yeah, okay, cool. So a lot of the funds are actually increasing their position on Nike. So maybe they know something we don't know. Total calls, 37%. Okay. Market value, who's got the biggest holder? Who's the biggest holder? Swoosh. LLC, 21 billion, then BlackRock, then Vanguard. Again, they've reduced their position, but only slightly. I think that's just taking profit. Again, who's super bullish? Wow. These guys have upped their position from 2% of their portfolio to 16%. Yeah, there's definitely something happening, but I just don't know what. So that is where you'd now go and look at investors relations. What time are we on? 8:54. Okay, quarterly earnings. Second quarter reported revenues were 11.2 billion, up 9% compared to prior year. Driven by growth across all geographies, led by Greater China, reported revenue growth of 24%. Nike brand digital sales increased 84%. Okay, so just from reading that opening headline, there's definitely something going on there. This is a bit of a boring earnings report. It's not that visually pleasing, but we should get a breakdown here of the different revenue sources from the different areas. Okay, so footwear is bringing them in North America, bringing them in 2.5 billion. Apparel, Europe. So they had a massive jump in their apparel in Europe and Middle East and Africa, up 23%. Although America, they're down 3% and down 9% on apparel and equipment. That might just be because of lockdown. But yeah, in China, they're doing absolute bits. Okay, interesting. Okay, from Converse, doesn't say the percentage change. Yeah, Converse is down 3%. Okay, yeah, there's something potentially happening there with them. I don't know what it is, but I would do some more digging. I think it's their online sales in China, which might be making a massive difference. So yeah, that's that one. And then I'm going to open the call back up and I'll take one more to do a quick scan on. Hang on a sec, where's my Zoom meeting gone? Where's it gone? I've lost it. I've lost the bloody bar. Oh, there we go. There it is. Okay, cool. So let's open it up. Badland, what do you think? If you're there.
Damn, dropping my government. Yeah, nah. I appreciate that, bro. I did my own research, not as technical as you, more of that mainstream headline reading or whatever. But it indicated that it was a good stock. It's obviously a lot of hype because you actually broke down the technical analysis, and it's not as good of a stock as I thought it was. But evidently, I'm still confident in Nike. But yeah, thank you very much.
No worries, no worries, no worries. Next up, so last one I'll do. If anyone's got a company they want me to just quickly break down and do a quick run through on, so they've been thinking of.
Yeah, can you have a look into Beyond Meat? You did mention them. Yes, yes.
Yeah, that is a very good point because I've been looking at them myself.
Yeah,
yeah, good shout. So let's go. Where it is? Okay. My head's gone completely. Oh, there we go. Hypercharts. So with Beyond Meat, I think it's all about their distribution positioning with the deals that they've got in place, potentially with Walmart and with McDonald's. But we'll read that on the investors relations report. I think they're in a very, very strong position to just kind of like Tesla, in terms of everything's in place. Now all they've got to do is deliver. This might even convince me. Okay, so revenue segments, restaurant and food service. So they were taking quite a bit from restaurants and food service in Q4 2019. And surprisingly, they still was making some money from restaurants during the lockdown, which is very interesting. It'd be very interesting to see Q4 in regards to that. Retail down a little bit, but again, this is a startup, so it's a bit different with this one. Okay, so let's keep going down. Revenue and operating income up and to the right, taking a bit of a hit here, which I don't like. But when you look at the numbers aren't bad. It's only 8 million. Like, they can cover that. Like 8 million, that's fine. That's no debt off their shoulder. Now, again, this is the problem with Beyond Meat, which a lot of analysts, why a lot of hedge funds are trying to short it, just because it's just not making profit. It's had its one peak where it made profit, but I think the fact that it even made profit in Q3, I think it was looking like, yeah, we're going to do it. We're going to start making profit. And then lockdown happened and just kind of buried them. But again, just depending on this partnership that they get, it could really work in their favor. So yeah, it's just positioning for them. Their margins, they seem to be going up. They're on a steady, nice curve. Obviously, a slight dip here again because of lockdown, but overall, quite nice. Again, very different to Nike. When we look at these margins, operating expenses, R&D isn't that high again. Restructuring isn't that high again. A lot of legal and admin expenses. These expenses are crazy. This is what ideally I like it to look like. But this is just a bit much on that. Growth, again, they were doing so well. And then 2020 is just, it's just really hurt them. However, look at this cash. 214 million in cash. Why the hell are you in debt if you've got 214 million? Yeah, these guys are jokers. These guys are actually just playing. Why are you just pretending that you're doing bad for? That I didn't know. I didn't know they were sitting on that much cash. These guys. Okay, so first we're going to look at the chart. We're going to compare it to S&P. See, it hasn't really affected the share price though. When you look at it, like the actual results of the company. No way is that compared to S&P. I must be tripping. That can't be right. Oh, snap. Okay. Yeah, they be wilding. Yo. Last time I looked, they were around here. They are completely making up distance. Okay. All right, all right, all right. Let's have a look a bit more under the hood. So far, this is Okay, so we know about this revenue dip, but that revenue jump though. Yo, that revenue jump is crazy. Yo, what's with these revenue jumps? The hell? Massive increase in their research and development as well. That's always a good sign. Net. I think the reason why these guys aren't doing as well is because I think they're investing into something, but I don't know what they're investing into. It's the only reason why it would look like that. So 403 million in assets. Total assets 451 million. Current debt 11 million. Accounts payable 26. Total common liabilities 47. Total liabilities 67 million. Whoa, 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 whoa. Hang on a minute. Yo, these guys are mad. Total assets 451 million. Total liabilities 67 million. How? Yo, this CEO is a boss. Total cash 275 million. Yo, they can cover their liabilities for jokes. Okay, just on fundamentals here. Yo, this company is good. Like they are nice. They are set up nicely. And this revenue jump, bro, 32.58 to 87 to 297. I think these guys are about to blow because these revenue jumps and this decrease here. Yeah, these guys are about to blow. Yeah, I'm going to put my money where my mouth is. I think I'm going to be investing in this one personally. Beyond me. Okay, yeah, here we go. 25 million of investment facilities, debt repayment, common stock issued. Okay, let's have a look, see which big boys are playing around. Well, that's all green. See, there's not many big boys are holding it though. They're sleeping on this. Yo, they are madly sleeping on this. Free hedge funds. Increased to 4. Yo, why are they sleeping on this? How are they not seeing these numbers that we're seeing? Oh, well, Vanguard, they never miss a trick, eh? They've increased their position. Yo, look at these. The top, what? The top holders 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Top 10 holders have all increased their position. And do we think they can do better research than us? I think so. Yep. People that were big on it gone bigger. Okay. Yeah, Beyond Meat. It's got me. Now let's find an entry point. I think the ideal time might be now, you know. Just looking at this. It's bouncing off the midpoint of the Dochan. Let me just redo this whole thing because it's just a bit of a mess. Okay. Oh, 1 hour. We don't want that. Let's just move that to there. That is super clear touches. Look at that. 1, 2, 3. Let's go weekly. Perfect touch on the midpoint of the Dochan. That. Okay, so now if the stochastics was up, I'd be all over it. Let's just check the RSI. Oh, yeah, it's a bit high. It's at 68. Okay, so this is looking like it could come down to 154. But even still, the price that it's at now, 170, that's good based on the numbers that we've just seen. I think this is a massively undervalued stock. Let me just pull in the 200-day moving average on that. Yeah, okay. So the lowest I'm expecting to see this go is 136. I doubt you'll get it for 136 though, because I think a couple of people are going to start sniffing around this now. A couple of the hedges. And again, if you look at this really nice support here, I don't think it's ever really going to go lower than 117. Yeah, 117. If you are absolutely lucky and some unknown reason it completely crashes and goes to 117, I'm absolutely going to buy that. So then we quickly go investors relations and wrap it up. Investors relations, and this is how we'll find out stuff other people don't know. Beyond. Hopefully they've gotten better presentation as well. PepsiCo and Beyond Meat established plant-based partnership. Why is it only letting me see it as a webcast? I don't want to see it as a webcast. Hmm. Okay, they're a bit weird with their earnings report. You can't like see it, you've got to watch it. Okay. This is where we're going to go real deep. I wasn't expecting to have to do this, but it's piqued my curiosity. No, that's the wrong one. Oh, 8K. There we go. Oh, where's the report? Okay, I'm gonna find the report and then I'll post it in the group because it's getting late now. I'll do some digging around, but yeah, I'm getting in beyond meat. That's all I'm saying. Thank you everyone for tuning in. Record amount of viewers today. Total of, I think we had 19 at one point. Hope I've contributed some value to you all today. One thing I do ask, like I ask every week, is for you guys to take a screenshot, a picture, and just share it so we can get more people in and just spread the knowledge, spread the love, and just get more people investing so we can get more people away from hedge funds and do it ourselves, really. So yeah, like I said, if you can take a screenshot, tag me. Let's get everybody on here. Don't know how to do it as the grid view. Can't do it as the grid view. Oh well. But yeah, I really appreciate everyone staying all the way through as well. It was a bit of a long session today. Thank you ever so much. Have a great day. Any questions anyone's got, just drop me a message on Instagram at I am Mr. Harding, or contact man like Ninja T, and I'll help you out. Love, guys. Namaste.
Good job, mate. Thanks, Mike. Appreciate it.
Thank you. Bye.
Thank you.
See you in a bit. Bye.
No, take care.